If you day trade, if you're a long short trader, you will find trades pretty much every day. Like there is no bad or there is no good or bad market in that way. Like you can pretty much trade almost every day as long as you get set up. So swing trading is different because swing trading just doesn't work, at least on the long side. And swing trading on the short side is very, very hard in my opinion, and also very dangerous unless you trade like ETFs, liquid ETFs, and like large cap names. But there's just, you have to like be inactive for long periods of time, sometimes for months. While if you're a day trader, you can be more active. Like there is not necessarily periods where you have to be more inactive to the same extent as in swing and position trading. So you gotta have a lot of patience. That's also why it's better to have a larger account if you start swing trading, because you don't have to worry about the money as much. Like, oh, I have bills to pay, I need to trade, I need to make money. So it's better to have a larger account because you don't give a shit. Like, so what if I don't make money this month? It doesn't matter because maybe next month I'll make $1 million, right? So it doesn't really matter if I don't make money this month. So it's very psychological too. Very, very psychological, this game. Like, let's look at high tide flags. If you have a high tide flag, let's look at overstock. You want it to rest on a few moving averages. Usually it's a 10 and a 20, the purple and the yellow line. Like you get high tide flag, like overstock a couple of years ago, you got multiple high tide flags. So you want the moving average to kind of catch up. It doesn't need to touch the price, but it needs to kind of catch up. Like here it even undercut the moving average. And here it bounced right off the moving average. And this year we have USLV, which I traded. It kind of starts riding. When the price starts riding the moving average, it doesn't have to. It's usually the 20-day. Those are the best ones. Or these are the most common ones. It kind of starts riding. You can kind of see that it performs a series of higher lows. Same thing with the rates this year. Now these are a bit slower moving, so they're not as explosive and fast, but you kind of can see it here. It's surfing the moving average. You see how perfect this is? Like a series of higher lows. It's just surfing. It's like it was surfing a wave, if that explains it. And you kind of want to see the higher low action, like, or a rounded bottom. It doesn't have to be perfect. You get these undercuts, but as long as these undercuts get bought up really fast, like it's a one-day thing or something like that, those are completely fine. You want to see that. You want to see the shakeouts.